Welcome to CrushTheStreet.com's weekly market wrap-up. Let's begin with the U.S. equity sector, which once again is on the brink of something truly special. Dow Jones to 15,000 and the S&P 500 to 1600. For the latter, the index is less than 7 points away from the mark, and it can reasonably be assumed that the bullish momentum will carry us to that point. On the surface level, momentum indicators are confirming the rising level of volume in recent sessions, and despite contrarian questions regarding sustainability of the markets for now continue rising. Ultimately, the legitimacy of any claims towards economic recovery will be judged purely on one thing: jobs. And I'm not talking about menial labor, do you want more lettuce on your taco jobs. I'm referring to careers, positions that can put a roof over your head, put food on the table, maybe even send a kid to college for a semester or two, although I don't want to get too crazy here. But time and again, white-collar jobs get shipped out or simply shut down and are only quantitatively replaced. The government has done a great job pulling the wool over people's head prior to the financial waterboarding, but even the best spin doctors couldn't spin themselves out of a Ferris wheel, judging from the latest jobs report. From a pure nominal perspective, 88,000 jobs is nowhere near enough to justify the term recovery, and that simply places more pressure on Ben Bernanke and the Fed. We can assume that talks of cutting off the monetary spigot was premature, and the dollar index has been reflective of the sentiment. The MACD shows a tremendous decline of momentum as the greenback failed resistance at 83.50 and is certainly bound to challenge the 82 level, where it will meet the 50-day moving average. Technically, the greenback has hit a bear cycle. Fundamentally, there's even more negative sentiment. First, the Fed has to move the markets higher from here to forcibly induce employment growth. Second, the Japanese yen is on the doorstep of a major paradigm shift, which in turn threatens the American recovery if it is caught off guard with a higher valued currency. That noise you hear is the sound of the printing press warming up. This bodes well indeed for the precious metals sector, particularly silver, which has been taking considerable hits as of late. Here's the good news. Over and over again, the $26 level was challenged, and when we saw the price drop in late March, veteran commodities investors knew that it was coming once again. However, it held true, and given the bullish fundamentals of a more aggressive Fed, this could lead to higher valuations despite a rising equities market. We could suffer through some more bearishness, but I expect such moves to be short-term and sideways rather than sustained and vertical. And that will do it for this edition. Thanks for watching, and we'll see you next week.
For more unconventional ideas, please visit CrushTheStreet.com.